US dollar short, yeah, US dollar Swedish krona looks very, very interesting, definitely. And yeah, you have clearly seen the head and shoulders. I hope. So this is the 12-hour chart. I can make my candles a little bit bigger, then you can actually see it clear. So this is a head and shoulder, just a general head and shoulder. However, there's a little add-on to this head and shoulder, which is this lower high. So you can see we have an additional lower high, which is a little add-on to a head and shoulders that you can pay attention to. Yeah, that is very, very important here. However, US dollar Norwegian krona, take a look at this one as well. I really like this one as well. Really, really good. Really, really good one. The right shoulder is also, well, and that's if you've read my book. So this head and shoulder, by the way, you will learn about this in the book as well. You can see here, we have the left shoulder, the head, and the right shoulder. And in this case, the right shoulder is significantly lower than the head, which is really, really a good add-on. And this shows that the bulls, the buyers, were not able to move price much, much higher. So there's a lot of selling pressure already, and there are not that many sellers and not that many buyers anymore. Yeah, this is something that is a good add-on to a head and shoulder. So yeah. Do you start your analysis on the weekly time frame? I am not a very big fan of multi-time frame analysis. I don't do it at all. I just stay on the time frame. So if I see a pattern on the, let's say here on the Norwegian krona, I have a pattern on the 12-hour. If I see the pattern on the 12-hour, I will trade it on the 12-hour. I don't need to see what is happening on the daily. I don't need to see what is happening on the weekly. If there's a pattern and if I can come up with a trading plan, if the technicals are valid on the 12-hour, I'll stay on the 12-hour. If I see a pattern on one sec, on the 2-hour, like here in this case, which is either whatever you want to call this, a triangle or a wedge, then I stay on the 2-hour. I don't need to know what is happening on the 4-hour. If the technicals are good on the 2-hour, I don't need to go to a higher time frame. So I don't care about multi-time frame analysis whatsoever. I'm a pattern trader. I'm a technical trader. I use technical analysis and price action, and I don't need to go to any higher time frames or lower time frames. No, I don't need to go to a lower time frame and look for confirmation. No. If I see a pattern on a time frame, I trade it on that time frame. All right. Does the height of the second shoulder compared to the first give you an indication of future direction? It definitely can, yeah. And there are many variations. A very high right shoulder is not that great usually. A low right shoulder is very nice often. A prolonged or a right shoulder that stretches for a little bit can also be nice because it can show accumulation or distribution, and then that often leads to a quick move or a quick outbreak. Question, this Sunday you've gone through your market and watch list and you have some good setups you are looking to trade. How do you trim them down effectively? So in TradingView, this is very easy. Here at the right hand side, you can see it hopefully. This is the watch list button, and then I just loaded all the Forex pairs, all the futures, commodities into this one. You just add them one by one. If you type it in here, whatever you type in here, you can edit them. And then if I found some, first of all, I will flag it. You can see there are different flags, red and green flags. And also I have a lot of alerts. Here's the alerts area. And you can see here are my set alerts for the week. And then this is how I organize myself. I don't trade 5 minutes. Moritz trades 5 minutes. And by the way, do we have any masterclass students in here? Douglas, I don't think they have any in-app translations, no. I don't trade the Nifty, no. Yeah, so this is basically how, and this is, so Moritz, what he is doing is he does actually do multi-time frame analysis. He goes all the way from the daily all the way to the 5-minute. And so his approach is very different than mine. You saw it maybe a little bit, I'm getting more into his style. He uses, as you can see here, he uses a moving average, which is a 50. Then he uses the pivot points, and he also uses Fibonacci's. And he does multi-time frame analysis. Yeah, so his approach is very, very different than mine. But yeah. CAD yen short, I don't know, maybe. Looks good, who knows? Looks very interesting, it's not quite there yet. We'll see. There was a huge supply area, you can see that here. Price didn't make it all the way, so we'll see what that means for this chart. Cool, and I see new people are coming in, 38, nice. For everyone who's new, welcome first of all. I will be here for the next 40 minutes probably, and if you have any trading related questions, whatever they may be, just post it in the chat and I will do my best to answer it. Trading is all about finding what works for you. Exactly. Moritz and I, we often find ourselves in the same trades, but at a very different entry level. He's often in and out quicker. I usually trade the higher time frames, and I am a breakout trader. He is a pullback trader. So it is so interesting to see how we trade the same pairs, the same trades, but at different stages. And that's such a nice, so nice to see that many traders will often take the same trades, but the way they analyze charts is very, very different. Sanjay, Fibonacci, that's something that only Moritz does. Yeah, I'm not going to do some Fibonacci's. Can you give some, supply and demand? So there are many different ways how you could draw and what supply and demand actually is. The first of all, and the most obvious, the one that you see everywhere, those are the supply and demand drops. So you can see whenever the market is moving sideways for a little bit and then suddenly it breaks out with a huge momentum breakout. That is then here, you would then have a supply area. If I find my tool. Okay, this is not really that helpful. Let me show so that you can see it. So this will be a supply area. And then how you trade it, there are many, many different ways how you could trade it with pullbacks. Immediate pullbacks are very, very interesting for supply and demand. Another supply and demand area would be down here. This is a spike supply. You can see that the market was on a sideways range. Then we had another spike down, failed breakout, and then afterwards the market rallied. So this is a spike demand area. And there are many, many different ways how you can and what actually and how supply and demand looks on your chart. Here would be a supply spike, but more interestingly, you can see that when we go left a little bit. Not sure if you can see it. Let me show you. So this is a classic supply area. On the lower time frames, you'd see it much better. And then you can see here a small consolidation and then a huge breakout, a strong trend. And then the next time the market comes back, you have another pullback. Here at the bottom, there's another area. And when the market comes back to this level the next time, then you will often see reactions. The market hasn't come yet, so this is still fresh. Other examples would be, there are those extreme areas. Whenever you see an extreme area and an extreme breakout, like here, this is a supply and demand area. Yeah, it shows institutional buying and selling. It shows where the big players are getting into their trades, and it can also show you how they are building their positions. Because, well, when a bank or a hedge fund or a government, a central bank, when they want to get into a trade, they cannot just open their trading platform and then enter however many hundreds or thousands of lots they want to buy. They need to slowly build it. And at one point, there won't be anyone else on the other side. And then this is when you see the huge market breakouts from those areas. Do you backtest? No, I never ever backtest anything. I don't, well, and that's where we differ. Again, Moritz, I think backtests don't work. I think backtests are a complete waste of time because everything that is important in trading is not there in backtesting. There are no emotions, you can fast forward, you don't need patience. Yeah, money is not obviously there. Money doesn't have any influence in a backtest, so it doesn't really matter. Recovery rates, drawdowns. Why do some backtest at all? I don't know. You need to ask them. Forward testing, yeah. When I forward test, forward testing means actual live trading. So if you want to test a new strategy, then you just trade it in the live markets. But you don't use your full account. Let's say if your real trading account is 100,000 US dollar, then you just set aside maybe, I don't know, a small account, something like 10,000 US dollar, and then you just you forward test it there with lower risk, and then you can evaluate if it works, and if not, backtesting is absolutely, yeah, in my opinion, it's useless. And that's where many people disagree. Yeah, this exactly, replay mode of past, that is backtesting. That is what I think is completely useless, because trading is hard only when there's money involved, when you need to wait, when you need to be patient, when you need to work on your emotions, when you need to wait for a trade, when you need to wait in a trade, when you need to cut your losing trades, when you're in a drawdown, how you do recover from a drawdown, or do you lose completely your shit and go crazy? Do you easily tend to do over trading or not? All of those things, nothing matters in a backtest. It's completely blocked out in a backtest. That is why I think backtests are absolutely a waste of your time. If you are completely new to trading and you have never seen your trading platform, it is not real backtesting. Then you just open your trading platform, you enter a few trades, you see how it works, how does margin work, how does leverage work, how do you set your stop loss, how do you size your position the right way, how do you enter the right amount of lots to get a certain risk. This is okay in a demo account, but other than that, you don't need to touch a demo account at all. Demo trading is absolutely, and it will make you actually a better trader. It will not make you, it will make you a worse trader. Demo trading will make you a very, very bad trader, because people who are very, very long on demo trading, they will completely ruin their mindset. They will completely have a wrong idea of what trading is. They will adopt negative patterns, negative behavior. And then when you get to the real money, it is very, very hard to unlearn those things. Because if you spend a few weeks or months, some people even spend years on demo, this is how you just trade, and this is what you think trading is. And people always say, okay, but I use my demo account like it is real money. I just treat it like it's real money. This is not possible. How do you long advise us to demo? A week maybe, until you know how to enter and exit a trade, until you know what is your strategy, until you know what is a good setup, until you know how to set a stop loss, how to take a profit target. If you know how to do those basic things, then it's time to go live, in my opinion. Many people will disagree with me. Mostly amateur traders will disagree, and mostly amateur traders who don't have any money and who have been too long on demo. And yeah, this is just, people always repeat what they have heard somewhere. They always say, but everybody must demo trade. This is not true. Everybody doesn't have to demo trade. Everybody doesn't have to do multi-time frame analysis. Yeah. In general, whatever the majority of people say, you should always do the exact opposite, because the majority of people is not really satisfied with their lives. The majority of people is not really having success. So whatever you see the majority of people say, do, just do exactly the opposite. That is always what helped me. When I was in university, I saw everybody around me, they were studying and just just memorizing data. I was at home trading and working on myself, getting better, reading books, journaling. When I got into my job, I was looking around me, I saw what people were doing, and then I thought, okay, do I want to be that person in 10, 20 years? If I stay in this job, I will end up there for sure. And then I said no, and I quit my job. I sold everything I had. I moved to Asia, traveled around the world, and in the meantime, built my trading. I risk based on percentage, always percentage. So what this means is that, okay, let's say you get into a trade for whatever reason. Then you measure, first of all, you need to measure your pip distance and how many pips. And this is always the same process for a position size when you determine your position size. First, know where your stop loss goes. And let me actually move this so that you can see what I'm typing, otherwise it's just a little bit useless. So this is very important. Before you get into a trade, you need to know where does your stop loss go. Then you measure your stop distance. Once you have your stop loss distance, then you ask yourself, how much percent of my account do I want to risk? And then you can see, okay, how much is my account? Let's say your account is 50,000 US dollar. You want to risk 1%. How much is that? 500. Whoops. Okay, so you want to risk 500 euros or US dollar or whatever. And let's say your stop loss is 50 pips. And then you just do the math and you just calculate. You do the math and then you figure out how many lots to buy. And that is how you size your position. 2% is quite a lot, but if you have a small trading account, maybe that's okay. How can we go directly to live trading if we haven't tested it? The question is, what do you want to test? That is the real question. What do you want to test? This is another very bad misconception. I have heard that it takes 10,000 chart hours to become consistently profitable. I can guarantee you that if you watch charts for 10,000 hours, you will not become a profitable trader. Most people have watched more than 10,000 hours of TV or movies in their lives, and none of them is a professional movie maker or Hollywood director or an actor. Many people have watched hundreds or thousands of hours of soccer or basketball, but none of them is a professional basketball player. What you really need to do is, you don't need to watch charts. What you need to do is you need to know your system. You need to know the rules of your system. Then you execute your trades, and then you review your trades. And when you review your trades, you need to ask yourself, what am I doing right? What am I doing wrong? How can I fix the things that are not going as planned? How can I do more of the things that go well? And then you develop an action plan. You improve your weaknesses, you leverage your strengths, and then you get better over time. Profitable trading has not only to do with watching charts. You can stare at charts all day long, but it doesn't matter. You need to understand what you're looking for, and the weakest link in any trading endeavor, in every trading strategy, is always the trader, always. So you need to really work on yourself. It doesn't matter what period moving average you use. It doesn't matter what is the exact setting of your stop loss. It matters how you manage yourself, how you organize yourself, how you review your trades, what's your feedback loop. That is what really, really matters. No, Bradley. Position size calculators do the same actually, but this is the general approach that you need to do. Most traders just do it the opposite way. They just think, okay, I need to risk 10 lots. So where does my stop need to go? This is not the right way. So you always need to start with knowing where the stop loss is, and then you approach it this way around. What does a strategy mean? That's a very, very good point. This is very important. Most traders say, when they say, okay, I need a strategy, what they want is, or what they think they need is a way of how do I get into a trade? What is the best indicator that gives me the best signal? Not true. So there are a few components. What is a system? Of course, how do you get into a trade? And those are the rules. That is, well, maybe what indicators do you use, the time frames, the signals, what has to happen before you get into a trade? How do you set a stop? This is very important, and many people overlook it because they never go beyond the first point. They're always stuck, and I've seen it, people do it for years and years. They only go from indicator to price action strategy to indicator trick to whatever. They never go past the first point, and then they don't have a system. They're only focusing on one little component of a trading system. How you set your stop loss will determine so many things about your trading. Most people don't even understand that. How you set your stop loss will determine how vulnerable it is to volatility. So if you have a small stop loss, you will get taken out more easily when the volatility picks up. But at the same time, your reward to risk ratio will be much larger. So your win rate may go down, your reward to risk ratio may go up. That's very important. And this is, again, every trader needs to really adjust their trading style to what makes sense to them. Some people prefer a tight stop loss. What I often do, Moritz, for example, he likes to have a wider stop loss because he said he doesn't need to pinpoint the exact entry. You just use a little bit of a wider stop loss. Your win rate will go up potentially. The reward to risk ratio will go down a little bit, but overall it cancels each other out. So you might have two traders who trade the exact same system, but they use a different stop loss size. Therefore, they have a different win rate, but overall they may be equally profitable. And that doesn't matter. How do you set your take profit? Again, a wide take profit means that the price won't reach your target as easily. So your win rate may go down again a little bit. But at the same time, when the price reaches your take profit, your reward to risk ratio and the potential reward will go up significantly. And again, those are the little parameters that you can play around with and see what makes sense to you. And this is, I think, a problem that many traders never go past. And everybody always says, okay, I need to find a strategy that makes sense to me. But they never go, or they never look at the real thing, stop loss size and take profit, because this will determine the win rate. How often do you get positive feedback? How long do you stay in trades? How do you deal with patience and all of those things? How do you size risk or positions, I should say. This is also, everything is part, and all of those things. How do you manage your trade? Do you use an active approach? Do you use a passive approach? Okay, this needs to be obviously correlations and all of those things. All of those things together, this is what a trading strategy is. Most people misbelieve, or just they don't know better, because this is what everybody's talking in the trading industry. A better indicator, a better trick, blah, 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 blah. And then they never go past the one point and they completely forget everything else. And only once a trader really has a holistic approach, then he has a chance of trading profitable. Otherwise, you are just being an amateur tossed around and just a complete victim. All right, sorry for the little rant. I hope this helps. But this is something that I see all the trading industry is giving new traders or inexperienced traders the wrong idea of what trading really is. And that is, and I always say trading, obviously it's not that easy. It's not hard, it is simple. Good trading is simple if you know what you're looking for. It's just like losing weight. It's not, you don't need to be a rocket scientist to know how to get in shape and how to lose weight. It is simple, it's not easy. It does require effort, obviously. It does require that you put in the work. But the objective rules are very simple. In trading as well, you stick to a system, you make it your own, you look at stop and take profit placement, how does it affect your reward to risk ratio, win rate, you look at risk, how much risk can you personally take so that drawdowns don't affect you that much, and all of that things. Good question, Bradley. When you're creating a system, how do you know the rules are the right ones to have? Obviously, you don't know that. And in the beginning, your results won't be great. But it is with anything, whether you start at a new job. Obviously, the beginning, when you have your first day, they won't just put you in a CEO position and say, okay, here, there are 300,000 people, $5 billion, go figure it out. You start very slowly, and then you need to build your experience. You learn, okay, what works well, what doesn't work well, and you need to track it. You need to really analyze it. You don't necessarily need a trading journal from the start, although I think you may do. But the one thing you can do is go through your past 10, 20 trades, and that's why I have a notebook. You take a notebook and you write down, on the one hand, for every trade, what did you do right? What did you do wrong? And then you can already find patterns often. There will be on the things you do wrong side. What I've seen with the traders that I mentor is that they're not doing everything completely wrong. They're usually just 2, 3, 4 things maybe that they keep repeating, and that makes them or keeps them stuck in this cycle where they don't know how to get out. And if you don't review your trades, this won't become obvious, and you will be stuck in this loop. And the only thing you see is that I'm losing money, but you don't know why. And it just takes maybe 10 minutes every week, 20 minutes every week. You just go through your trades one by one, and you look, okay, what did I do right? What did I do wrong? What do I need to improve? And then you can slowly move into the right direction. And then you can make small adjustments month after month, week after week. And that is, in my opinion, the only way how you can get better. This is how I develop my trading strategy. I've been trading for 12 years, and I still, every month, I make small adjustments. Every year, I have not a very different, but I have a much better trading approach than the year I have in the past. Because I always review, I always refine my approach. I look at, okay, what is the market doing right now? How do I need to respond to that? What are maybe rules that worked well in the past, but maybe need a little bit of adjustment? And this is, those are the things people obviously don't want to talk about. I could sell a lot of courses if I would just tell you what you want to hear. Just get this course, learn the secret, and then you will be rich next month, and the Ferrari will be right next to you in your living room. This is not how trading works, and this is not what Moritz and I are here for. If you are in our masterclass, or if you want to be, this is the long-term approach. This is how you really learn to become a long-term profitable trader. You learn how to really treat this as a business. And most traders, when I ask them, when they're struggling, I ask them, do you really deserve to be a profitable trader? Do you really deserve the way you approach trading right now? Do you really want to put the food on your table with this approach that you have for your family? Do you want to really have your retirement fund based off of those things? And people will realize very quickly that the way they're doing it is often not really professional. It's not sustainable. They are all over the place. There's no structure. And how scary is it if you think, okay, I'm now a full-time trader. I need to put money on food on the table for my family. My kids, my wife, they all depend on my trading. But what are you doing? Look at your trading right now. You are all over the place. You have no approach. You're breaking your rules, you're in and out, you don't even have maybe rules, you're just jumping from indicator to indicator. And this is unfortunately what the trading industry has become. And you need to approach it from really, and this is a business, this is really business. I wake up every morning, do my homework, do my trading work. In the night, I review my trades, and this is how you get better over time. And I know this is not a sexy advice that will scare many people off. Many won't come back, but this is just, yeah. Ever since we started Tradeciety, we made a promise to ourselves that we just say it as it is. Simon, you want, you work full time. I want to trade on a 2-hour time frame on the cable. That's usually not the best advice. So our traders, the one I mentor, many of them work full time. What I usually suggest is that they go to the higher time frames. The 12-hour is very, very good. The 8-hour is still okay if you can check your charts every 8 hours, if that's possible with your work schedule. The higher time frames are usually much, much better suited for people who are full-time. And also just trading one pair is usually not a good advice. You need to spread yourself out. You need to follow a lot of pairs so that you can be selective. The more pairs you have, obviously, the more opportunities you have. And then you can say, okay, this doesn't look quite right. It's okay, but I have 3 other pairs that look very, very nice, and I can trade them. If you are limiting yourself to one pair, and then this pair may be stuck in a range like here for days and days, or here for days and days, or you get ripped around here and here. That's very tough. How much should a new trader focus on trading aspect and how much on, well, if you're not a scalper, your trading, the actual trading time is very, very limited. I don't need, during the week, I rarely look more at my charts than 30 minutes a day because I do my preparation, I do my watch lists, I set my alarms, I know exactly when I want to get in and where I want to get in and what has to happen. And then I just need to check, okay, does this happen? Yes, then I trade. No, then I don't do anything. And I just come back every few hours to check my charts. Is it already happening? Yes, no. If not, I go away, I do something else. In the night, then I update my trading journals, I update my watch lists, my trading plan, and the rest you can use on working on yourself. And many traders, naturally, obviously, they get into this self-improvement. I have it here. It's a new journal. I go through those every few weeks, few months, because you need to really understand that in trading, you personally are the weakest link, and also everything, it really depends on you. You need to really perform at your best level. Otherwise, you have no chance in this trading business. And you need to constantly work on yourself. You need to monitor what are your thought patterns, how do you talk to yourself. Many people have a problem with negative self-talk. This is very, very unfortunate. And if you are just, if you are new to this and you stop just listening to how do you interact with yourself, how do you talk to yourself, you would never talk to a friend like the way you talk to yourself in your head. And you need to become aware of that. You need to work on that, and you need to become better with that. You need to develop discipline, not only in trading, outside of your life. You need to just become the best version of yourself. This I know sounds very, very cliche, but it is true. In the end, no one really cares if you make money. If you don't make money, no one will be there to help you out. It all depends on you. How you manage yourself, how do you deal with emotions, can you pick yourself up when the going gets tough, can you manage your patience level. This is, yeah, so trading time is really not that much, at least if you are not a scalper. If you are a scalper, obviously you need to be in front of the charts much more. But if you trade the higher time frames, anything above the 1 or 2 hour, you should not watch your charts all day long. The less you can watch your charts, the better it is. You have a self. If I set some rules in trade, I got stuck. Yeah, but a few good trades, that's really all you need. This is something that many traders overlook. You can use services like Darwinex, for example. The best traders on Darwinex, they maybe make 20% per year, not per day, per year, and they have millions and millions of allocations. The best hedge funds, the best funds, they make maybe 10%, 15% per year. If you can make 1% per month, you can attract millions, hundreds of millions of capital that you will be able to trade. So don't worry about making or doubling your account every few weeks. Really focus on building a track record. It sounds, or many people will just neglect this, and they will say, okay, I just start with $1,000 and every month I will double it, and then within 2 years I'm a multi-billionaire. That's not how it works. The rich people, the people who are rich, they didn't get there by doubling their money every week. They have a long-term approach. They know that in times when negative interest rates are often, or at least zero interest rates are very, very common, if you can perform at 10% a year, you can attract unlimited amount of capitals. So really understand that and really get your ego out of the way. Really make a commitment and a promise to yourself. Say, okay, the next 2 years, I'm not going to care if I can double my account every month, but I want to make 2% a month consistently. If you can do that, you will be rich beyond what you can imagine. Yes, I use Edgewonk for more or less the data crunching, and I use a physical notebook to just gather my thoughts, to just write down things that come to my mind, to just journal something that comes up in my head. Simon, you have a fear of losing, then you don't place a trade, and then you miss the opportunity. The easiest way to do this is that, to overcome this, is that you save screenshots of your analysis and then of the trades that you maybe didn't take. And then over time you can see, okay, my analysis is often quite okay. And then once you see that, it slowly starts to build confidence in your approach, in yourself as well. How much is a good yearly return on investment in trading? Yeah, it really depends on your objective, obviously. If you want to maybe at one point manage a lot of money, then you don't need a lot. If you want to make millions with your own money, that's the problem. That's when you need a lot, probably. If you have a very a small trading account, and you have somehow the belief that you need to turn this into a few millions, you will have a very hard time. Profitable trading starts at making more than 0%. If you can make 5% per year this year, that's a very good start. Then maybe next year you can make 8%. Then the year afterwards, maybe you can make 12%. Then the year afterwards, maybe you can make 15 or 16%. And when you can do that, you show it to a wealthy person, you have a new investor. If you make 15, 16%, you show it to somebody who has a lot of money, they will instantly give you money. No questions asked. The rich people, they don't know where to put their money. And there are billions and billions out there of people who don't know where to park their money. The world is getting more uncertain, volatility is here. You don't get any money in your bank account. Bradley, no, I just write down my thoughts. It's just like a diary format. I just write down what comes, whatever comes to my mind. What did I do in the day? What were my struggles during the day? Why did I come? What? And what I really, really focus on is negative thought patterns. Whenever I catch myself talking down on myself, or whenever I catch myself saying, I can't do this, or I don't deserve this, or on the other hand, when I break a promise that I make to myself, how often do you get into this inner dialogue in your mind where you maybe work out and then your mind comes in, wow, you worked out so hard, you were so disciplined all week, let's just get over to Pizza Hut and order 5 pizzas, stuff it in our face, and then watch Netflix for the next 12 hours. And we often, and this is something that you really need to, it doesn't always come as extreme, obviously, but how often does your mind or your ego come in, or whatever you want to call that, and it convinces you that, okay, you should take this trade. You've waited so long, you don't want to miss this opportunity. It's not quite there yet, but you should take it. And this little voice, once you start noticing it the first time, it drove me crazy for weeks, because realizing that and it's not you, it's something else talking in your mind all the time about, it wants to get you into trouble, it wants the quick fix, it doesn't know about long-term and delayed gratification. It always tries to argue, get the pizza, take the trade, cheat on your wife, do that, watch Netflix, play some games, go on Tinder, go on Instagram. And once you can manage this little voice in your head, and once you can overcome this thing, and once you can discipline it, and once you are stronger than this voice, whatever you want to call this, then good things can happen to your life. So those are all the things that I put in my journal. Everything that really stands out, that is what comes in. Do you use Fibonacci targets? I don't. Moritz uses Fibonacci targets. How do you choose between correlated pairs? I trade correlated pairs. So if, for example, there will be a trade on next week, the US dollar Norwegian krona, a short, and the US dollar Swedish krona, they are very correlated. And I will take both, but I will just then use less risk on each of those trades. So if you want to risk 1% per trade, then you maybe just risk 0.5 and 0.5. They're not perfectly correlated, and by the way, you can do that here. If you go to indicators and then you go to correlation coefficient, and then you can just type in the symbol, and then you get the correlations. So you can see perfect. So this is not a perfect correlation. It's a very, very high correlation just until recently. And this is the 12 hour. Now you can see that the less noise we have, yeah, the less swings often. So you can see this is almost a perfect correlation of 1. So yeah, you really need to adjust your risk. So I trade both here. US oil, yeah, well, wait for the open. This will be a very, very big open for oil. Just what happened with Saudi Arabia. I'm sure this will cause some gaps in the open, and then just let the dust settle, and then you can overthink your trading plan again. Euro Swissy, I don't trade it. Well, maybe. I'm not sure yet. Maybe it looks like a long. We don't know yet. Right now, it's not a long trade. No, it's shaping up to be a long trade, but not right now. No, it's a few things still need to happen for this. Nice. So I still have maybe 10 minutes, 15 more minutes. First of all, because the chat is so quiet, did I turn you off with all the mindset talk and all this? Take your trading seriously and treat it like professional. Let me know if this is not what you came here for. If so, then I can just go to Google Images and pull up a few Ferraris. Maybe that's more like it. Just kidding. Yeah, Dean, that's the problem. That's good to hear. Cool. So we have some rational people in here. Nice. Cool. So any more questions that are on your mind? Matthias, I know. Yeah. So the Sunday webinars are just the general Q&A. I try to stay away a little bit from the charts because if we don't all have the same context, then it's a little bit tough. It's very different, for example, from the masterclass, for example. Yeah, I think I will do this every Sunday. Probably not next Sunday. I'm not sure. I'm gone next Sunday with Moritz. Next, we are actually, and me and Moritz, we are spending thousands and tens of thousands of US dollar on self-improvement. Yeah. So people, again, most people spend their money on holidays, going out with friends, drinking, partying. We spend it on self-development, looking for people who are where we want to be. And then we just invest. We're going to a 3 months workshop of 4 months, a 4 days workshop in London in October. For example, we're going to something next week. Okay, now there are coming a few questions. Okay, now I miscode. Okay. All right. Yes, mindset is really, you should take it seriously. Do you have a new good book you read or reading or read? My Kindle is not here. Yeah, so I've mentioned it in the forum. For mindset, I think really good is the Untethered Soul. Let me actually. Yeah, if you're in the forum, then you know probably everything that I've read. Things that you should read always are. So welcome to the book club. No, just kidding. From Hesse, Siddhartha is very, very good. Very, very good. How to Win Friends and Influence People, very, very good. Then really any book from Og Mandino. I think this might be mirrored, but Og Mandino. The Greatest Salesman, The Greatest Miracle in the World, very, very good. The Monk Who Sold His Ferrari from Robin Sharma. This is the book I read, I think, when I was in university 12 years ago, who almost started me on this mindset journey. And obviously, The Alchemist. I think I have it in 6 different editions. It's just the best book ever. Manuel, yes, Wednesday analysis is as always. How much is the lifetime? So we don't have lifetime for our masterclass because lifetime is quite long and we cannot plan that long ahead. So what we have is 1 month. And here and every package, the course is included, the price action course. We have 3 months And we have, so this week we're going to have 4 live webinars. I'm doing Monday, Moritz is Tuesday, Thursday is Moritz, and Moritz does pullback trading with Fibonacci's, and I'm coming back on Friday. And on weekend, Moritz and I will do a live Q&A session with our masterclass. So yeah. So you can choose. The 3 months is usually what people find the most appealing. It is $510 for 3 months, and you have access to all the recordings, 3 live or at least 3 to 4 live webinars per week. Every day I share setups. Every day Moritz shares setups. It's very nice, and you have access to the live. When are you starting your hedge fund? Yeah, so this is coming, but obviously there are a lot of regulations once you start managing other people's money, which is good. Lucas, that's great. And the book that really got me into this from I can't believe I'm blanking on the name. It's the book is called Untethered Soul from Michael Singer. Really, really good. And this guy is not a spiritual, he's very spiritual, obviously, but he is also, or he used to be a CEO, and he built a $1 billion company. So this is very, very interesting. He's not just the guy who is like one of those hippies who lives somewhere in the middle of nowhere and just meditates all day, which he does, funny enough, but he built a multi-million, $1 billion company. A freshly graduate, and that's, after I graduated from university, I studied finance. I got my master's in finance. I started working a little bit, and then I just saw the people around me, and I immediately quit my job, sold everything I had, and just ran away to Asia. And I bet everything on myself. I said, okay, I don't want to live the 9-to-5 lifestyle. That's not for me. I don't want to end up where my colleagues were. And I know that, okay, if I put in the work, this is not rocket science. I can make it on my own. That is what I did. What's the learning time of a new student in the masterclass when they go on their own? That's very hard to say. I would say that if you stay maybe 3 to 6 months, you have a very, very good foundation. You could do it on yourself. Well, you probably after 6 months, you won't go out there and suddenly have a Ferrari, but you have the basic knowledge that would enable you to not depend on us anymore. And that's really the goal. We don't want to have people hanging around there for ages. Everything that we do is really to encourage independent thinking, responsibility, and just accountability. And talking about accountability, next week, I don't think we have any masterclass students in here, so this will be a surprise though. Next week, Moritz and I we will start something very special in the masterclass when it comes to accountability in your life, in trading, and how to really make big progress. Siddhartha is the best. Yeah, and funny enough, I never read a book in until I finished high school. I absolutely hated it. I talked about this to Moritz yesterday. Yesterday we were doing something together yesterday, and I told him in high school I never read a single book. Whenever we had a book exam coming up, and that's by the way how I passed my English and my German high school diploma. I was Googling for The Simpsons episodes on Macbeth and for Faust, Goethe. And that's how I then picked up the basics. And then after high school, I started appreciating the value of books, and now I have an unlimited supply of books on my Kindle. Why did you choose Forex over stocks? Well, I did look into stocks. I had my first stock portfolio actually when I was 16, but I never really enjoyed stocks too much. I like the way Forex moves because the dynamic of Forex pairs. Well, you have two Forex pairs, obviously, or two currencies that build one Forex pair. And in stocks, you have a very, very big difference between rallies and sell-offs. In Forex, you don't have that. So it doesn't really matter if the price is going up or down. It usually always moves the same. So you can trade the inverse head and shoulders just like a real head and shoulders. You can trade an ascending triangle like a descending. So if you trade long or short, doesn't really matter that much in Forex. The market will move very, very similarly. But in stocks, it moves very differently. Yeah, I've considered writing a book on psychology. I actually started it. But then recently, Moritz and we made a complete turnaround. We want to limit our output. You will not see as many blogs anymore. A few YouTube videos, our podcast will be reduced. I will just do the Sunday webinars, and everything, our whole energy and our whole focus will be put into our masterclass now. We really want to make a very, very big difference in the masterclass with the people that we mentor there. And all of my energy and all of my time is in the masterclass now.